Now we are going to see the next unit in block 1, importance of financial management. In this, we are going to see the objectives of this unit. After listening this unit, you may be able to understand, analyze the current financial position of individuals to formulate strategies for future needs within financial constraints. The second objective of this unit, analyzing the need to take prompts and correct measures instead of worries in later stage of financial management life cycle of a company. These are the two objectives of this unit. Now we move on to the next topic, is called as importance of financial management. In this, the first point, financial planning. Second one, protecting funds. The third one is about allocation of funds. The fourth one is investment opportunities. Fifth one is financial decisions. And the next one is about economic growth and stability and improve standard of living. These are the importance of financial management. Now we can see one by one. In this process of all this importance, you all may think that these points are repeatedly coming once again and again and again and again. Don't think like that. This is the important points in the whole financial management subject. It deals with the word again and again about the planning of finance or financial planning, you can say. Financial planning is a crucial area where the decision is made. It's a crucial area. It's a broad area and a very crucial and a very important stage called as planning, as we are known to it. Because planning, organizing, directing, controlling, including staffing, managing and administering the people in a company is more important in each and every sectors. So likewise, we can say about the financial planning. Financial manager plays a vital role for taking a proper decision in financial planning. Putting a plan for each and every allocation of funds, all division of funds through cash or through any kind of mode of transaction, what you are going to do, this planning plays a vital role, financial planning. Now we can move on to the next one, protecting funds. How we can protect your fund? How we can protect your funds? In this, we can see about achieving a business goal is called as protecting finance. When you are fixing a target for your business, the target to be achieved by your employee or employees or the staff members inside the organization. How you are doing it? By achieving the target only, you can automatically say your fund is protected, because you are going to invest through a process of expenditure as well as waiting for the income too. You are waiting as a profit is called as income, and expenditure, you use your cash for buying raw material or purchase of raw material, goods and services, machinery, salary to employees. All these things are when going out of the company's account by the financial manager support. This kind of protecting funds done when you achieve the profit of the company. The third point we are going to see is about allocation of funds. How you will allocate each and every individual or each and every department proper funding. That is very important. If you are not allocating each and every fund to each and every individual or individual departments, you automatically cannot do any kind of work. This is about the allocating of funds. In this, the author says one important point. Listen here. The allocated funds to assets or machinery or anything enhance the operational proficiency for business concern. So it's a proficiency business concern. When you are going to do operational proficiency, it is called as allocation of funds. The next one we are going to see about investment opportunities. I will read a sentence. Listen here. As a person, if you are good at managing your finance and saving, then you will get opportunities to explore your cash. This is called as investment opportunities. Now we are going to see the next heading in this importance is financial decision. How will you decide that your financing done by an individual or a manager of a company or a financial handler of a company is correct? They say that one financial choice or a decision according to business concern is made, it will be renewed again and again for achieving the profit. This is called as the financial decision. In that, you can automatically find out whether your decision is correct or not. This is called as financial decision. And the next one we are going to see about economic growth. How you can develop your growth in a business. How much funding you are doing for the economic growth or economic development of, you can say, our country. In this, proper financial planning is very important for the economic growth. In this, the financial manager automatically divides each and everything to ensure your financial stability, and through the economic growth, the opinion to ensure the same is through financial managing of cash. You should handle your cash properly for the stability of development of economy or economical growth or your business growth. These two kind of growth plays a major role in financial management. This is the major importance of financial management. The last one is improve your standard of living. If you are planned and you are done, your decision is correct, you will attain more profit and your standard of living also increases. Improve, there is an improvement in the standard of living. If you are getting more profit than your target rate, automatically your salary increases, you will achieve bonus, you will get incentive, or you get promotion, or you get transfer from one place to another place with the increase of your salary too. So your standard of living also improves. This is about the importance of financial management. Now the last one is valuation of a company. Valuating. You are going to valuate the company through financial handling, how much profit you have attained. That is a target, achievement of goal. Very important. The target ending or target achieving. When you are going to achieve your goal, how you are going to be valuated. The financial manager will see trading account, profit and loss account, and balance sheet. If the accounts is tallied properly with the accounting year, you are achieved in a proper way. That is called as valuation of a company. You maintain your good financial handling by the process of each and every aspect. The next one we are going to see about the topic is tax plan. Very important one, not only for a single person, the whole company too, each and every individual. Each and every individual is very, very important for tax planning. Tax planning, very important one. Not only for an individual, it will be for a company or a group of people, or a whole big company, or you can say our industry or any kind of huge company. In each and there are so many branches. Tax is very important. How we are going to pay tax? If you are paying tax properly, your kind of thing will be done. Tax planning. I will read, listen here. Your financial planning should also include your tax planning. When filing to plan your taxes appropriately, it will lead you spend more out of your pocket. If you are not paying the tax properly, it will be taken away from you. That is, your cash will be thrown out for the tax purpose. Next one is capital reserves. You all know it's a general term, capital reserves. And in this capital reserves, they say it is possibly reliable to each and every business to higher levels. This capital reserves will help you to increase your standard in higher level of business activities, because your allocation of funds, if the allocation is done properly, you can automatically have the reserves. The reserving is done automatically by the capital usage. The day by day activity you can take, monthly activity you can take, 3 months once, 6 months once, or a year. You can automatically find out the proper accounting maintenance by your financial manager. You can automatically go more heights. This is about the importance of financial management. Now we are going to see a very important thing, types of finance. In this there are 3 types. One is personal finance, second one is about corporate finance, and third one is public finance, that is called as government. So these are the 3 types of finance. In this we are going to see one by one. That is called as personal finance. In personal finance it includes unforeseen and uncertain personal events. First point is unforeseen or uncertain personal events. Second one, transfer of wealth across generation of the family. The third one, managing taxes and complying with tax policies. Fourth one, preparing for retirement. Fifth one, preparing for long-term expenses or purchase involving a huge amount. Sixth one is paying for a loan or a debt obligations. The last one is investment and wealth accumulation goals. Once again I repeat all these points. In personal finance we have protection against unforeseen and uncertain personal events. Second one, transfer of wealth across generations of the family. And third one, managing taxes and complying with tax policies. Fourth one is preparing for retirement. Fifth one is preparing for long-term expenses or purchase involving a huge amount. Sixth one, paying for a loan or a debt obligation. And the last one is investment and wealth accumulation goals. And the next topic is about corporate finance. In this we can see some points. That is called as capital budgeting. Second one, employing standard business valuation techniques. Third one is about identifying the sources of funding. Fourth one is determining the utility of unappropriated profits. Sixth one, acquisition and tax investment in stock and other assets. Identifying relevant objectives, opportunities and constraints. Risk management. And last one is stock insurance while going public and listening on the stock exchange. This is about the corporate finance industries. And the next one we can see is about public finance, that is government. First one is about identifying the expenditure required by the public entity. Second one, sources of revenues. Third one, determining the budget process and sources of funds. Fourth one, issuing debt for public projects. And the next one is tax management. In this we have the process of financial activities by the government by proper rules and regulations, following the activities done in financial management. This is about the public finance, types of finance. And the next one we are going to see about fundamentals of corporate finance. Fundamental, you all know the word called fundamental of accounting, golden rules for accounting. There's a fundamental for each and every financing. So in this we can see about investment principle, and the investment principle significance is to use the finance for all the most efficient decisions. So investment principle is very important in financial management. And the next heading we can say is about financing principles. One is about investment principle, second one is about the financing principle. In this financial principle we have capital to fund your business, capital to fund your business. Your business is funded by your own capital, because you may divide each and every branch in different areas. So how you are managing a fund for each and every activity of allocation of funds, and you are using to gain more profit at regular intervals. This is about this. And next one is about dividend principle. As I told you, investment principle, second one is financing principle, and third one now we are going to see about the dividend principle. In this dividend principle, the allocating the government revenues, it is going to be allocated by government revenues. This is about the dividend principle. And the next one we are going to see about the types of corporate finance. In this, you all know the general term. The general terms in types of corporate finance: short-term loans, and then financial lease, trade, credit, and then you can see about accrued income, accrued accounts, and long-term corporate finance as the process of debentures, and then equity shares, bank loan, and flotation. These are all the things availed in all the activities for each and every financial management. So I deliberately, with authority, I am telling you, if you are following these kinds of rules and regulations for handling your cash properly, you can attain your goal with proper periods. If you are not in a proper thing, the importance we have seen, very important factors we have seen before in the importance. Most of the 7 points are very important, and it will be repeatedly coming in each and every unit. So if you are undergoing all these activities in a good way by following the rules and regulations, you can achieve the goal of the organization with a stipulated time.